So right now, as things stand with oil in the 70s, even in the 60s, it's very profitable for most of the players that are active today. So everything that's unprofitable, all of the drilling in these areas that are not good, that's gone already. One way to put it is that the break-even price, in order to generate returns on these investments, it varies a lot across the region and depending on many things, but on average, it's around $55 to $60 WTI oil price. If you drop below 60, then activity will need to decline and production will drop, and the Middle East will open up, will probably increase the production, and that will be very bad for the US oil and gas industry. At $70, all of these companies are making a killing, and they can probably keep going for the longest time. It's two things. There is small private companies. They are the ones growing the most, running 1 or 2 or 3 rigs. Smaller companies that you've never heard about. They're free to do what they want, and their business model is to sell out to the bigger oil companies. And if you've been following these earnings, everybody's obsessed right now with the topic of inventory and long-term plans and what are we going to do in 30 years if we can. So it's all about securing inventory, right? So there were huge acquisitions recently. Exxon acquired Pioneer, for example, 2 of the largest oil companies in the United States. And their stated objective with this is synergies and whatnot, but in reality, it's securing a large acreage, right? Piece of land where they will be able to keep drilling for the next century or so. Because, it's a finite resource. There's still a lot of it, but it will run out if you keep drilling at the current pace. So there's concerns about how far can you go in time and who is going to be relevant 20 years from now. A lot of these small private companies running 3 rigs, fueled by private equity, they're not interested in 10 years down the road. They want to prove to the investors that they're sitting on good acreage, that they can grow production fast, that their wells are good, and that therefore this company is valuable. And then these private equity funds need to have an exit strategy, so they will be sold sooner or later.